All right, I'm returning to the fair value gap testing process. I'm looking for 10 setups 50 times. And today is Tuesday, August 23rd. Today is obviously Tuesday, and why I call that out is because I'm trying to frame what's going to happen for the entire week. I'm trying to anticipate that today. Now, I did take trades today. So as I work through the process, I'm going to talk about how the day provided trades for itself and then how that might lead me into trades for the rest of the week. So I'm going to jump right into this. The time frame here doesn't really matter. I think it's 120 minute, but it's only meant for me to be able to see the entire range of what's going on. And as you look at this, we see that we've got a gap down on the Globex Open. We've broken several pivots. We've got important fair value gaps that have been created on the breaks of those pivots. That's important to me. So probably we are drawing down to here, and that makes sense. That that was a reasonable expectation. So when we sort of opened up and drove down, that we might be looking to fill this all in. Now, that's not really a totally consequential detail because I wasn't using that information today. I wasn't using it yesterday. Didn't trade yesterday. But as I start to plan out the week and I'm looking at what's going on, I ask myself a couple questions. Where are we going next? What's most likely to happen? Monday was a big day. Tuesday was a small day. So probably tomorrow we're going to have either another big day or a day that takes out a high or a low and then rests. So a couple of things I want to point out is that we had a pivot after the purge up here, and that became important for the ensuing days after. Well, now we've got a potentially important pivot here. Why? Because we've offered sell side to this. And if that holds and we offer buy side, it's now rebalanced. So what happens after that will determine some information that will show up in the rest of the week. So that was probably the likely downside target to start. Now, but I think that these relative equal lows right here are important. But we held this very specific and important price down here today that I think needed to get taken out if we were going to go lower. And it didn't. So that's interesting. To me, it says, all right, need a little bit more liquidity before we head down. So I do think that this is a draw on the week, but we may have to go up before we get down there. Now, I want to look at the 60, the 15, and the 5 all at once and lay out a few pieces of information that I was using. Number one, that this entire range here is a dealing range, and it's in discount on the week. Or excuse me, I back that up. That's not true. No. It is a dealing range, and that's what it's my animations are ahead of themselves. It's a dealing range for the day, and that was important to me. Also, as I build this out, you can see that here's the midnight open, so we've got discount below that, premium above it. And then here you go. On the dealing range, it's close. It's not exactly right, but it's right around 50% of there is. Here's the discount and the premium of that dealing range. So, and these are all ICT terms. I'm using them because those are the terms he came up with, and I'm using them to map out my process and sharing that with you so you can understand process mapping. We offer a workshop where I work with traders to help them map out their process and see where their errors are so that they can become more profitable. They can affect their trading in a positive way. So here I'm looking for a push into discount on both the day and on this dealing range. And then I want to trade that up into liquidity, which I viewed as being at 65 on the day. And you'll see why that became important in just a moment. So I am looking to frame a trade based on the deep discount since we're way down from the Globex Open. We've been pushing lower. I'm looking at Tuesday or Wednesday as forming the high or low of the week. At this point, I'm thinking it's going to form the low. And where is my optimal trade setups? one thing you'll know is that if you just take pullbacks to gaps indiscriminately, you're just going to get run over a lot. So there's reasons why ones should work and reasons why they won't, and narrative is everything to do with that. So the first place that I was looking for a long, because we're deep in discount, was this 5-minute fair value gap. We had a 5-minute and a 1-minute, and it was tagged right with news. We had news this morning at 9:45, and smoked down there, grabbed that, and then ran higher. Couldn't get a part of that. So I waited for the second opportunity right here, where we created another fair value gap after a change of market structure. Didn't have to do that, but it was still in discount, so I thought it's okay. We should be able to get higher. So that's your first entry. There's your second. And then here's a ideal short. And the reason I think it's an ideal short is because you've got a break in structure, you've got a relative equal high, it's a lunch pullback right at the 1 to 130 time frame. And it had an order block in there that I thought should hold. And then I also expected it to take out the low, but it didn't. I think the last trade that I thought was reasonable was this long here. Another break in structure, pullback, expecting this to run into here. So I was buying this, expecting it to run into there and then turn short. So now let's break down the executions. What you see is a couple things here. Number one, early short, just a scalp, didn't work. I was right, just early. Then there's the long that I showed you. Now, here I bought this because I didn't think we would come back below midnight, but we did. So I took the stop on that, and then I entered again when we got down into discount. Scaled at the overnight high, and then held on to it right below the order block here, expecting us to go to 65. But we got smoked, and that didn't work. Now, I took a short here because I saw this break, pullback, but I sold it in discount rather than premium, so that's an error. I'm just going to start building this out here. And the point of this, let me just point this, there we go. There you go. This is not in premium, so it's an error. And as I said, I was holding this for 65, so I took the stop right there, which sucked because, that was pretty far on side. And, that's always painful to watch it come back that far and then get tagged out. So anyways, I don't doubt the process. The only thing that I can say here that mitigates this notion of holding on is that we had pulled back and then sliced down through. So really, realistically, we could have just said, okay, as soon as that happened, we're out of the trade. There'll be another trade to go long or short, and we don't really need to hold on to it. But being things as they were, I was okay with having a really good scale on the trade and saying, if I can get to 65, that's a home run. And it was already a home run because it was only 2 points of risk. So then when this trade starts to work out, we're going into the lunch hour, and I'm thinking to myself, okay, it's the lunch hour, so there's a couple of possibilities now that we've taken out the low. And those possibilities are that we are going to balance until we break out at 3 and then fail. Or potentially we hold this low, we break structure to the high side, we hold a low, and then we go, we actually try up into 65. And I still thought that might have been possible, right? Basically right here. But it didn't. And so as soon as we started to roll over, I said, okay, no, we're in balance. 65s are off the table, and probably this is going to be a lunchtime pullback. So you'll see that there's perfect price delivery. Look at this box. I drew this box on, and you don't know when I drew the box on. I drew the box on before the trade ever got there, and I'm looking off the order block right here. Got these relative equal highs, and the test perfect delivery of that lower price, and then straight down into the low. And you scale here or here, and then you try and hold for the low, but it doesn't go, and eventually just closes right down here somewhere. So now we turn our attention to where are we going to go for the rest of the week. A couple of ideas. Just frame this all out again. I think this is an potentially important pivot. So if we hold this, then we're going to draw up to here and here, most likely. But we may do, the hypothesis for the week at this point is that we're either going to take this low out, or we're going to draw here, or we're going to rebalance this fair value gap. So we offered buy side, we've offered sell side, now we got to offer buy side again. If we offer buy side, meaning if we get all the way back up to the last week's low without taking out the low here, then that will most likely be the draw. That we'll take out last week's low as a tag to balance this fair value gap out. So those are the two hypotheses right now. And I think if the Globex session puts in a low here, takes this out, then that's probably the low of the week. And we're going to redraw back up into this area. So to round this out, I think we have the potential to have tomorrow morning's Globex low be the low of the week. If we have drawn up first, in other words, if we don't take this out, and the Globex stays inside, or if the Globex stays inside of yesterday's range, then no, then we're not. We're very likely not at the low of the week. We probably run up higher and then bring that back down and then take these out. But if we do take it out, then it might be the low of the week. And taking this out would be like a purge and revert, just like what we had up here. So we take this out, run back higher, create a structure, and then we would be running to 4107, 4200 to clear this here. Maybe even get back to the gap and clear that, which would be giving us a doji. Probably it would be like a doji. It would look like a day, just like, a week, trading week that looks just like that. So that would look kind of bullish, wouldn't it? It would. I think it would. And, anyways, I don't want to speculate too far in advance, but that could happen. So that's my view today. I'm going to make tomorrow's trades and the remainder of the week based on tomorrow's Globex session. And my expectation, my hope really is that if we take this out, that we're going to be ready to move up into here and then into here. But if we don't take that out, then I'm going to expect that we're going to pull up here and then we're going to take it out. So that's it for today and the week. The process I used here is price action. Got a really strong understanding of price action. I'm using multiple time frames to frame bias, and I'm using ICT logic and terminology to describe some of the price action ideas that I see. I'm doing so over time. And as I said earlier in the video, I am offering a trader workshop. What I do is I spend an hour with you as a trader and I map out the processes that you're failing at. Trading is process driven. Every performance sport, everything that you're good at is process driven. It's a logical set of sequential steps. And my job is to understand where you're departing from a logical process or helping you understand that you don't have one. And in so doing, you're going to be able to diagnose the challenges that are preventing you from getting into trades, holding trades, over trading, under trading, over leveraging, all of these kinds of things that plague traditional retail traders. So check that out, and we'd like to hear from you. I hope you enjoyed this video, and we'll talk to you soon.